Hi everyone and welcome back to another live trading series. Today is Thursday, June 17th, and I have a bunch of trades I'm going to show you on my TFSA. I might make another video on my margin account. I haven't released a trading video since I've just been letting Theta do its thing. I've had a lot of June expirations and not much to do, so I haven't filmed anything. But things are expiring for me tomorrow. I'm probably going to do two separate videos. I'll focus on the TFSA right now. A lot of people have been asking me to show them how I open up a brand new covered call in my TFSA. I've been mainly rolling them. So now I do have some capacity. I have around 18,000 US dollars. I'm going to be showing you opening covered calls on some cheaper options. So if we look at QuantumScape, you'll need around 2,700 US dollars, which is a good entry position. If we look at Open Door Technologies, you'll need around 1,600 US, which is not bad. I feel like, if you do have 1,600 US dollars lying around, this should be a good starting point. So if I show you, let's see, let me roll some of these first. I'm going to let some of these expire. So my Air Canada covered calls are in the money and they're going to get called away. Right now it says that I'm at a loss, but I do have the shares. You can't sell naked calls in your tax-free savings account. I'm going to let these get called away, and then I'll decide what to do with the cash a little later on. So if we just roll, let's see, bingo. So this is by Nanogenomics. I do have 10 covered calls here. I have 1,000 shares. I have the 8 covered call expiring in one day. I sold them for $35 a contract. I can buy them back for $13, but I'm going to roll them up. So if we look here, custom, if we go add a call, I'm going to sell. So buy back the June 18th call. You have to buy back the exact one you sold. I'm going to sell another 30 days out, and I'm going to sell it up another 1,000. So I'll make another $1,000 here because I have 1,000 shares and I'm selling 10 calls. Going up one strike, $1 a contract, $1 a share. Let's see if I end up making, I do want this to get called away. So let's see the difference this makes. So even though I am making $470 to sell this for another 30 days, if these do get called away, I will be making another $1,000. So this whole trade, if it does work out, if it gets called away, it'll be another $1,470 US dollars, which I like a lot. I'm going to do the same thing on Corsair. So Corsair expires tomorrow. I do have 2 contracts here. Oh, okay, these got filled. I do have 2 contracts. And yeah, let me just roll these out. So again, add a call. So I'm going to buy back 2 at $35 and I'm going to sell at $35. I'm not rolling these up. I feel like Corsair treats the 35 strike as like lava. It goes up for a little bit and it jumps right back down. I've been selling the 35 covered call on Corsair, I think since January, and it's working out really well. If we take a look at the premiums these will give, this is around $368. So man, this is interesting. If I just see, what am I rolling it up at? 368. If I just show the 3,500, this is around 5%, just rolling it out another 30 days. I don't mind if these get called away. I'm not married to these. I do have more Corsair Leaps in my margin account, so no big deal. Let's just get these filled. And I'm going to show you open. So if I have around 18,800 US dollars, I can buy 400 Open Door shares and 400 QuantumScape. Let me do that now. And then I'll sell 4 covered calls. Buy 400. Let's just do market. This is 6,600. That's fine. Let's do quantum. I'm going to buy 400 as well at market. So how much US dollars? I probably have $1,000 left. Let's see when it updates. $1,000. Yeah, I probably could have bought more. Let me leave that $1,000 in there for now. So if we go my positions, I have 400 shares, so I can sell 4 covered calls. I'm going to be doing around 30 days to expiration. Okay, well, you see here, they don't have weeklies because there's not that much volume, so you don't really have much choice. Right now it is 1660. Let's go 20. I like the 25 delta, and the closest one is the 20 strike. So if we go divided by 20, if it increases in 30 days around 17%, this will get called away. And if we look at my return, if I sell at $45 a contract and I needed $1,600 to sell a contract, we'll go 45 divided by 1666. This is a 2.7% return. So $45 divided by 1,667 US dollars. This is a 2.7% return just on the option premium, not including the shares, not including the incremental share price. So let's do that right now. Let me select, let's just go, I want these to get called away. So I'm gonna sell 4 calls July 16th. Let's sell $180. Let's see what happens. And these should get filled right away. Amazing, let's see what this looks like. So it automatically, like Questrade shows you the covered, it turns it into a covered call. But yeah, I do like this. I don't mind holding this. It's a real estate company. Let's do the same for QuantumScape and let's see what we could do. So take a look at QuantumScape. There's a lot more volume. So they have weeklies, but I don't want to focus on weeklies because it's too much to manage. And I feel like I already take enough risk on some weeklies. So I'm going to go just monthly on this. If we look again at around the 25, okay, 25 delta doesn't exist. Let's go 21. So fine. The 35 strike, what is this? So 27 divided by 35. It would need to increase 23% in 30 days for this to get called away. And if we look at my return, so this is $1 a share, 100 a contract, and I need $2,700. So if we go 100 divided by 27, let's say 27. So this is a 3.6% return just on this option. Obviously a little risky. You can't, these aren't proven companies yet. These are more long-term plays, but they are kind of cheap. And if you're interested, these could work for you. So I'm going to be selling 4 covered calls again at the dollar mark, $400. Let's sell this. Should get filled right away. Amazing. So this is what it looks like. Did I do that calculation properly? 420 divided by, yeah, it's around a 3.6% return. And this doesn't even take into account if these shares get, if the shares get exercised. So let me just do this calculation for you guys. So let's say I spent 10,900. So if we go times 400, so plus 2749 times 400. If I sell at 35 and then I got 400 in premium, so I'd be making this plus this minus that. I'd be making $3,404. Let's round to 3,400. Let's leave it. I'll be making $3,404 in 30 days. And this on my initial investment, let's go times 100. This will be 31%. That's if I get called away at the 35 strike. Ideal scenario, you want to keep the shares so you can continually sell premium. Ideal scenario is 0 here, just the 400. So 3.6% return. This is what I'll be doing. Hopefully I'll give you guys a monthly update on this in case you want to follow along. People did ask me to choose a couple cheaper ones. Like I do have Apple shares, which are, so I bought them at $70. They're worth $131 right now. So to do one covered call on Apple, you will need $13,000, which is a lot. A lot of people don't have, but if you just have, like say 2,700 US, you can open a covered call on QuantumScape, or you can do Open Door Technologies if you'd like. Something else, what else could you do? You could do Binano Genomics. I don't know So if we go by nano, if we find it somewhere here, I lost it. So, okay, this is way riskier. Look at this. I wouldn't recommend doing this. This is a little on the risky side. You just need $700 to open a covered call on them, but I'd focus on maybe more established companies, but people have been asking for some slightly cheaper ones. This is how my TFSA looks so far. So you see some are closed. These are recently opened. I'm obviously at a small loss because I did it at market and I wasn't really fighting for the best price. But yeah, I think that's it for this video. I'm probably going to be switching to my margin account and doing 2 separate videos. But yeah, thanks for watching. Let me know if you have any questions. This is selling covered calls in a TFSA. Thanks, guys.